Hi everyone, so let's take a look at productivity. Now this is a really important concept when it comes to competitiveness, particularly international competitiveness. The more productive an economy is, the greater supply side gains will be enjoyed by that economy. That will mean that they will be able to benefit from lower priced goods. Their domestic consumers will benefit from those goods, as will international consumers. So therefore you're likely to see an improvement in the current account balance due to the trade balance improving, exports over imports. Okay, so let's have a look. So productivity refers to the efficiency of production. It's nice and simple to understand. It's about the ratio of output to a given level of inputs, of course. Now then we've got another really important concept here, and that is about total factor productivity. I love this concept because total factor productivity cannot be explained by increases in the physical capital, so the land, labour, capital. An enterprise doesn't actually explain the gains that are being made in terms of the output being produced here. So this really refers to gains in innovation and technical efficiency. Best way of thinking about this really is that it's not about perspiration, it's about inspiration. So that inspiration then provides ideas as to how to use those existing resources far more effectively to generate far greater output. Okay, so just come back to this, output to inputs, really important concept there. That if you're thinking about increasing the level of output, can you keep your inputs constant? If you can, you're likely to be gaining some sort of total factor productivity there due to the efficiency within which you are using those resources. Okay, so what are the benefits of raising productivity? Well, the number one benefit is likely to be that there will be an increase in wages. Now, this will derive, if you've looked at labour economics, if you haven't, don't worry about this yet, but if you have, this will be derived from the greater marginal revenue productivity of the employees. So as their marginal revenue product increases, their wages are likely to increase in line. That will feed through to the firm actually making better profits. That will then also contribute to increased dividend payments to shareholders. The share price of a given company is likely to improve, and therefore there could also be a wealth effect which may drive future consumption within that economy. Okay, so there's a number of related benefits to those points. Then we've got the prospect of lower priced goods and improved export competitiveness. So you're generating supply side gains here. As the supply curve shifts to the right, then it means that the price of the given good comes down, of course, and the quantity sold increases. So this can be hugely beneficial for an economy. This will generate an improvement in the trade balance, which will improve the current account position, of course, on the balance payments. Then there's the prospect of increased economic growth, because if workers are earning greater wages, firms are more profitable, then economic growth is likely to follow that. That will also give rise to a fiscal dividend for the government due to the automatic stabilisers there. So if companies are doing better, they may well begin to take on more workers, unemployment may fall, so unemployment benefit payments will also fall. In addition to that, the actual taxes on income earners and company profits would increase, of course. So these are the outline benefits really that you need to understand and the related points to them. So in the UK, we've had a real problem with productivity since the financial crisis 2008. It really has flatlined, and in some areas it's regressed quite badly. So let's take a look at where we're going nicely in terms of productivity growth. So an Economist article which highlighted the different sectors within the UK economy has done this quite nicely and explored the fact that transport and logistics and administration and support, those are areas that are really increasing the productive gains that are actually being made in those fields of work. That is largely due to the increased use of the technical efficiency element here, and the fact that they are using more technology in those lines of work, in essence. Okay, you've got all the GPS tracking when it comes to transportation. Further to that, you've got improved networking resources for things like Google Drive, Trello, all sorts of apps which actually help integrate the actual workplace and keeping employees and colleagues more connected. But there are some areas of poor performance, and that would most notably include finance and banking and the pharmaceuticals industry. Finance and banking, well, that's largely down to the fact that there has been a big increase in the amount of regulation that has been needed after that financial crisis. So that has been very significant and burdensome for that industry. Okay, so what about raising productivity? How can we raise productivity in the UK? Well, we can really think about investing more in physical capital. So that may be infrastructure, it may be capital goods within firms. So to do this, you may actually think about actually reducing the level of corporation tax so firms can actually undertake more investment in capital goods. We want to generate more innovation, of course, and promote research and development. Again, corporation tax breaks may benefit such an area, but the Catapult Centres are also being used. And these Catapult Centres really help to actually join universities together with workplaces to ensure that the research that's being carried out in universities is really applicable to the real world. And it also provides a constant stream of talented staff for those businesses. Then promote creative destruction through entrepreneurship and ease of doing business. So ensuring that the regulatory burden isn't difficult, and ensuring that the actual market entry factors, and there are no barriers to entry within certain areas, that would help improve things as well. The need for competition, so having a competitive environment, again, that fosters that creative destruction, as Schumpeter termed it. And then we've got the need for investing in skills and skill development. So education is obviously important, but as it is lifelong learning, we've seen that comparative advantage ebbs and flows, and therefore, workers need to keep updated. Final point is an interesting one here. It's just about whether we should actually think about raising interest rates and the effect that would have. It's argued that raising interest rates would actually help to put out of business a number of so-called zombie firms. These zombie firms are reliant upon very cheap loans, and of course with an interest rate currently at 0.5%, then it does really beg the question, should interest rates be raised so that some firms would actually be made bankrupt, and you could then actually use that capital in other areas, because those zombie firms staying in business has quite a high opportunity cost. Okay, final note to actually consider in relation to all of this is, to what extent do we really want to improve productivity? We have a very low level of unemployment in the UK economy, just over 4%. Now, therefore, to what extent should we really think about increasing productivity? If we increase productivity, that unemployment rate is likely to also increase. And we've discussed previously that in countries like France, which is regarded as relatively highly productive economy, they have an unemployment rate of around about 10%. So to what extent do we really want to improve productivity? Okay, thanks guys. Cheers.